The Debt Management Office will be offering about 141.3 billion naira in today's Treasury Bill auction. Traders at Axis Bank say they expect a cautious trading session today due to the NTB auction. Kinskin Ukeje, FX dealer at Axis Bank, joins me to discuss market activities today. Kinskin, thank you so much for joining us today. Bring us up to speed with midweek on activities across the different market segments.
Yeah, thank you very much for having me. And the market, the money market opened this week at 132 billion. We've seen provisions for the CBN, SME and Invisibles auction, which has thinned out in liquidity, and also we've seen the NDIC premium provisions by the industry, and this has thinned out liquidity. Yesterday we also saw a boost of 50 billion by the OMO maturity, and this has further increased the liquidity a bit, and we saw OPR and overnight rates close at 5.25% and 5.63% respectively. On the fixed income space, we've seen the bond maintain a bearish undertone, and we've seen traded bills and bonds increase by 5 basis points, and we've seen the 2035s trade at 12.48 and the 2042s at 12.95%. On the T-bill side, to going into today, we'll see a cautious trading note as the DMO will be offering a 141 billion rollover on the NTB side, and we do expect that the rates should inch up on the long-term end of the curve as the liquidity in the market is a bit thin. On the FX side, we've not seen much of the liquidity side. We've seen the CBN coming in the week on Monday to intervene in the SME space, and we've also seen them intervene to FPIs on Monday, and which we expect them to do so today also. And we've seen the rates remain relatively stable, and we've seen the NFX close at 415.90 yesterday, and then the INE closed at 416.63%.
Now, for the DMO offer today, 141 billion, you say you expect rates to inch up slightly. But what's been the trend in the last couple of auctions? Has there been a trend of an increase in rates, or it's been mixed?
Yeah, the last auction we saw an increase in rate on the long end to close at 4.45%.
Okay, so should we expect this to continue to climb? I've talked in the past with some of your colleagues about rates inching up, and that resistance point on the part of investors demanding more. Obviously, being in a negative real rate environment, but of course still trying to push for higher rates, from the authorities.
Yeah, we should see more push from the investors for a higher yield in returns, and also earlier in the year we had a lot of liquidity in the system, but this liquidity going forward and looking at the maturity we have ahead, we see that there's not as much to bring down the rate, so we should see an upward trend going on.
Now, for the bearish sentiments at the bond market, what would it take for a turnaround? Do you foresee it being short-lived, or what would it take for investors for this to turn positive?
Yeah, we just think it's a short-term play. Just to know that the retail auction there's a possibility of a retail auction tomorrow, and then investors are trying to trap idle funds in those securities so as to avoid the CBN CRR debit. Now,
for the liquidity levels of the market, how long? I know that this oscillates, from time to time, but would you say the market right now is awash with liquidity, and how long can the market hold on to this liquidity?
Yeah, the market is not awash with liquidity at this time. The liquidity has been thinned out with a lot of debits.
Now, for the FX market, we've seen rates mixed, but naira gaining at the INE window to 416. Talk to us about supply-demand dynamics, the CBN Smith auction. Are we still seeing, for the FPIs especially, to what extent would you say the CBN is meeting the demand at that segment of the market? What can you tell us?
We do see the CBN meet the demands of the FPIs on a best effort basis, and we've seen them continually come on Mondays and Wednesdays to intervene in that space. And we saw their intervention on Monday to FPIs, and the resulting impact of that brought about the gain yesterday to 416.63 from 417 the previous day.